What is up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Before we dive into the analysis, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, starting off here with Bitcoin on the 3-month time frame. I apologize that I was away for a few days. I was in New York, actually at a cryptocurrency conference, which I may make another video about to recap that event. But looking at Bitcoin here on the monthly time frame, so this is the 3-month time frame actually, and what we're looking at here is a rise in price starting in the month of January in 2020. That stopped right up here in April, and we had this significant drawdown, but we haven't actually formed a high here just yet, and the reason is because we haven't broke the low of any of these candles yet. So once we break the low of one of these candles, we know that our high has been set. Now this 3-month candle here closes in 7 days. So when this candle closes, we'll likely see this as an inside bar. Now what that means is the next 3-month candle is very important for us to either break the high of that 3-month candle and continue the rise up, or for us to break the low of that candle. Now if we break the low of that candle, since it's so close to this previous low, I would imagine that we're going to see some expansion and we'll see some movement down to probably at least, I would say 20K would be reasonable. So we need to keep an eye on this higher time frame here to see where price might move next. And I'm going to be watching this 3-month candle close very closely to see if we end up, over the next 7 days, closing this as an inside bar, or if we break below this in the next 7 days, which we would need a pretty significant dump, but it's not out of the cards. Looking at the monthly time frame, we can see that our monthly equilibrium pattern that we've been talking about in the past several videos, which is really just a pattern of higher lows and lower highs until eventually we break out either to the upside or to the downside. But whatever way we do end up breaking with a tightening pattern like this, we're going to see some expansion, meaning we're going to see some volatility in that direction. So if we end up seeing this come down here, it looks like this monthly candle is going to close bearish. If we close this candle where we are now, I would like to see the price come down in the coming months and form a higher low somewhere above the previous low here at 28,796. So for that to be the case, we would need to come down, set a higher low somewhere above this 28,796 level, probably around, somewhere in the range of about 36K down to about, I would say, probably 32K. That kind of range seems pretty reasonable given the magnitude of this move. So we can always just use the magnitude of the move to decide if we think there's going to be a lower high set or a higher low. So what I've been talking about for the past several months is this actual move right here. So for the people that have been watching my videos, you obviously had a short opportunity here on this rise in price that I talked about because of the magnitude of this drawdown here. So we saw the price draw down over 55%. So what that means is for us to break to a higher high, we would need to increase over 126% on the first move, which is very unlikely because of how much that appreciation really is and how much money needs to go into the system for that to actually occur. What's more likely is we come up, we form a lower high, we come down again, and we form, because of the magnitude of this move, likely a higher low, and then we can look to, if we're still bullish, make a higher high thereafter. So it looks something like this, where we come up, we form our lower high, potentially right here, we come down, we form a higher low, and then if we're really bullish, after we form that higher low, we'll see a higher high thereafter and a continuation of this bull trend. If we're bearish, we'll see us come down, either immediately break to a lower low, or we'll come down, form a higher low, come up, form a lower high below this high, if this does end up being our high, and then potentially a lower low thereafter. So the longer this pattern tightens, the more significant the move is going to be when it does end up breaking. So this pattern is very key to keep an eye on in the coming months to see where our momentum is headed. So let's go down to the weekly time frame. So this weekly candle closes in about 3 days, and we've seen a lot of volatility here over the past 3 weeks since we set our high on September 6th. So since that point, we've drawn down about 25%. Very likely that our higher low is potentially being set right now. And the reason for that is because of the magnitude of the move. Given this move up, this seems about halfway, in between this low and this high. So it seems a pretty reasonable spot for us to form a higher low. You can see the people that were pricing in this potential higher low to be set have already potentially made, somewhere above 12% profit if you got in some bids down here in this 40K zone. So when you know that a lower high or a higher low is likely going to be set on a high time frame, you should be looking to position yourself in to get into that move. So we knew on this rise in price that a high was going to be set at some point. And so what we knew is we could just start setting our asks up here for going short as the price appreciates for a potential drawdown. And even if we set them in this range, you can see that we still would have been profitable given the drawdown that we experienced this week. So you still had profit potential of about 15%, even if you went short at about 47K. So this is why looking at these higher time frames and understanding just the simple concept of a magnitude of a move and how that correlates to a higher low or a lower high is very important. And that can be very profitable as well. So now if we think our higher low is going to be set, we'll likely see some sort of appreciation in the coming weeks to come up here and set a lower high. And the reason we think we're going to set a lower high now is because of, once again, the magnitude of this move. So we've drawn down about 25% for us. So for us to come up and break to a new higher high, we would need to appreciate over 34% on the first go, which is very unlikely. What's likely is we'll come up and form a lower high. So what I would like to do here is get a fill in, a short, somewhere above wherever the candle closes this week, if we are to come up and form that low here. So if we look at the 3-day time frame, we can see our resistance level that we talked about in past videos held up absolutely perfectly right here. So this level is really just from a simple bull trend here. So we see we have a low, high, higher low. It's very slight, but you can see the wick of this candle did go past this one, and then a higher high thereafter with 2 candle closes above our key high here. So that makes this last down candle where people were selling their Bitcoin a potential support zone for price. But you can see that we pushed right through it and closed 2 candlesticks below it. So once we see that and we know this was it should have been a valid support level, this turns into a valid resistance level and a very strong one at that. And that's what we see right here. We come into it, we get a doji candle, and then we get this massive dump thereafter. So the profit potential for this trade, even if you entered on, let's call it the body of the candle, was about 16% plus. So this is a very significant trade. And so these sorts of trades are ones that you want to look for on these 3-day time frame and above, where it's a very high probability support or resistance level. So that is the main resistance zone, even though we are starting to bounce from this low that we are potentially setting here from September 19th. This is going to be the main resistance zone for price, and that's going to be right at about 46.7, up to about 49.7. So about a $3,000 range there. Let's go down to the single day time frame and talk about a couple things here. So from a single day perspective, you can see that we're bouncing here, but what we're seeing is declining bull volume, and we're running into the daily pivot level here. And if you don't know how to use the pivot indicator, check out this video that we did that'll break that down for you very simply. It's a very simple indicator to use. In this case, the pivot, because the price is below it, is going to be resistance. So as we come into it here, let's see if we look really closely. It looks like we did touch it ever so slightly, and we're starting to dump from that level in conjunction with that declining bull volume. So that's confluence. Those two things are telling us the same thing, and that is that we should be rejecting off of this level. Another thing that's telling us we should be going down is the super guppy. So we have crossed below the super guppy and closed below it. So the trade that I talked about up here, the long of these green EMAs, would be exited here once this daily candle closes below these green EMAs. So now, because we've closed below the green EMAs, these EMAs are resistance, and we're running into them now and potentially seeing them turn into resistance. So because we've already risen about 14%, I would say it's pretty likely we're going to be setting a lower high somewhere in this range, if not at the top of this gray range, and then we'll look to come down and form a higher low likely based on the magnitude of this move. So just based on the simple concept of the magnitude of the move, you can see how I use that as a guide to potentially look to go long or go short based on those signals. So that's how the daily time frame is looking. One last thing I wanted to talk about on the daily time frame is this potential setup for the Ichimoku cloud. We are in almost the most bullish position this indicator can be in, which is when you have the cloud green, the tank in the blue line, above the red line, the Kijun, price above the cloud and above the Kijun, but we're not above, the price is not above the Tenkin. Once we get above this blue line, then we are, if we get a candle close above that blue line and all of these things are still valid, then this indicator is telling us to buy, and this is a strong trend indicator that you can see back here yielded this very nice run up. So once we got the signal down here in October, this trend, led us all the way up to our all-time highs. And then, this bear trend here, here's your entry right here, one of these candles. And you can see that that led to a very profitable trade as well as we draw down here in price. So if we see this flip and go bullish, I will look to add to my Bitcoin long position and then look to ride this up in the coming weeks. So that's all I got for this one, guys. If you liked it, actually, before I get to that, let me just briefly talk about the 4-hour time frame. One other level I wanted to highlight here was this 4-hour level right here, which is from our bull trend right here, where we come up from a high, So we have a low, high, higher low, and then higher high with 2 candle closes above this key high, making this purple rectangle right here, this last down candle from September 23rd, our main support zone for price. So that's where I'll look for price to potentially bounce off of if we are to bounce relatively soon. All right, that's all I got for this video, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our global Telegram channel. This is where you can get the latest updates on different projects in the cryptocurrency ecosystem, interact with different community members from around the globe from over 15 different countries, discuss a variety of different topics in our Sunday community chats that we do over Zoom, and learn a ton more. So check that out. It is free to join, and there's a link for that in the description below. We hope to have you in there soon. And until next time, onward and upward.